All right, good morning, everyone. For the record, it is, what is the date? It is 12/15/2021. We are coming to the end of the year, and I am excited to have everyone on. My name is Nathan Klug, managing partner of Praxis Agency Consulting Group, and we have, as you already see from the screen, and I think I always butcher your last name, Amanda, but Amanda Flaskowski.
Hey, that's good. That works. Bleskowski.
Wait. See, when you say it works, is it right or does it just work?
No, that's good. That's good. Bleskowski.
Perfect. Well, we are excited to have Amanda on from Protective. As everyone's noticed from the title of this webinar, this is probably one that I'm most excited about. Amanda's come up with the best marketing title that I've seen on the webinar, and it's going to be true. So today, as you noticed from the title, the easiest way to make a six-figure case in 2022. We are excited to talk about what Amanda has in store. And the whole design of this webinar is to help you understand the target market, the product, and the process of how you can make a six-figure case in 2022. And I've seen a bit of this information before, so I'm very excited that she's going to share it with everyone. And again, if you write just one of these cases, I'm sure everyone would be very excited to write just one of these cases in 2022. So with that said, if you haven't heard, I apologize for the background, but I'm going to pass this off to Amanda. Take care of a couple housekeeping things real quick. For everyone that's on, just really quick, everyone raise their hand for those that are on, because there will be some time for interaction and things like that. So really quick, everyone that's on, raise your hand. Perfect. I see a lot of people raising their hand. We almost have 100% participation. That's perfect. So thank you everyone for raising your hand. The other thing I want everyone to identify is there is a Q&A section at the bottom. So you should say Q&A. That's going to be the best place. If you have any questions about what you see, that's going to be the first place to put in the information. We will have time afterwards for questions and answers as well. But if you see something and you're like, I want more clarification, make sure you put that into the Q&A right away. We are excited to have this webinar. Like I said, I'm going to pass this off to Amanda. Pay a close attention and follow through with the activity that she's going to walk through as well, because she will help you identify. She's not just going to give you information, oh, this is great, this could possibly happen, but she's going to help you identify within potentially your current network people that this could fit with, and for you to be able to write that case, which would be a big deal for everyone here in betting. Without any further ado, Amanda, the floor is yours. Thank you so much for your time and being on, and I will pass the baton to you.
Perfect. Thank you, Nathan. I appreciate the few minutes you're giving me here this morning. It sounds like I heard a small child with you. That must be very early age insurance agent in training, right? She's paying attention to what we're talking about here.
Absolutely. For those that don't know, my 4-year-old daughter and myself are in quarantine because we tested positive for COVID. So this is a quarantine webinar.
There you go.
So this is even better, but I appreciate it, Amanda. Thank you. Yes, she is in training. So 12 years in training or 14 years in training since she's 4 years old.
All right, good stuff. Awesome. Well, welcome everyone. Nathan did hit on the title. I should have actually titled my presentation that you see in front of you, kind of the easiest way to sell or close a six-figure case in 2022, because that is really what we're talking about here today. And it's probably the reason that kind of drew you into joining us. So I guarantee you will not be disappointed. This is a new product line for Protective Life. I say that we launched it it's been with us for about a year now. So this is our first full year of selling this executive universal life product at Protective Life. And I will tell you the average case size is $262,000. So when we're talking big cases, these are monster cases. These are whales of cases. I'm going to help you, I'm going to give you all the nitty gritty details, but help you identify how to find one of these whale of a cases. So I am going to go over a few things here today. Number one, we will talk about product details, right? And we will, I'll really share with you a bit of an activity that's going to allow you to dive into and think of your current contacts, your current book of business, so that you can really get a jump start on identifying an opportunity to close one of these large cases. Number three, I'll share with you is an easy script to really get your foot in the door at these companies. And I say companies, that's a little teaser. That's a little bit about kind of what we're going after here. And then we will have that Q&A at the end. So if you have questions, put them in the questions box, or at least write them down so that you can bring them up at the end of the presentation. So that being said, before I actually get going into the nitty gritty details of this product, we do talk about it as being the easiest way to close a big sale in 2022. And I like to compare it to winning the lottery, right? If you think about playing the Powerball, and for those of you who don't know, the Powerball today, the drawings, tonight, if you will, $333 million right now. And I love that number. 3 is my favorite number. So 333 million, that's just like an omen for me. I need to go buy my tickets for this evening. But selling one of these is kind of like winning the lottery, right? To win the lottery, yeah, you got to get lucky, but what do you got to do? You just got to buy a ticket, right? And then you get paid if you get lucky. So these cases, they're big paydays, and you don't do a lot of work. You don't really have to work for them too much. It's just about who you know and sort of getting your foot in the door and making the introduction. It's not a lot of work, but a big payday. So kind of like winning the lottery. So that being said, I'm going to start out to kind of shift your mindset a little bit. So aside from what you might be used to when it comes to life insurance or traditional life insurance, individual policies, this is a little bit different. Yes, they are individual life policies. However, they're sold in kind of a group package. You saw at the beginning, it said group term carve out. And so we are targeting companies as the clients, if you will. So these are sold in a group to higher income earners. And that's how Protective can actually have a guaranteed issue type product. There's 2 underwriting questions we're going to get into in just a second, but they're individual policies that we're selling in a group. So Protective can spread the risk across multiple lives. So again, got to think of it as a corporate case, really. So kind of like an executive benefit or an employee benefit that's designed again for those higher income earners. It is a corporate sale. So you're really looking to have conversations with the owner of the company, the CEOs, the CFOs, maybe the director of HR. That's who we're getting the foot in the door with. And then it's a corporate purchase. So that premium is a line item on that company's budget. Company is paying the premium. There's a couple different ways that you can design it. Most of the time, companies paying the premium. Again, these are individually owned policies. So the employee or the executive owns the policies and they designate their beneficiary. So it's a perk, right? And we call it group term carve out, guys, because most large companies have group term insurance. But this is often where we're carving out the executives, those higher income earners, because we want to give them something better. Higher death benefits, pretty much no underwriting. And here's the kicker, it's portable so that they can take it with them when they retire. So we carve out all the higher income earners, the executives, and do this for them instead of group term life insurance. So again, that's how it's predominantly designed, with the employee or the executive as the owner of the policy and designate their beneficiary with the company paying for it. About 5% of the time, though, this can be used as business coverage. So like a blanket key person coverage, for those of you that have done business coverage in the past, this could be a blanket key person coverage, whereby company would still pay for it, but company owns the policy and company's the beneficiary. So you kind of have to get your mind right before we go into some of the nitty gritty details. And I'm going to share some of the nitty gritty details here with you guys, but don't get too caught up in it, because you'll find out here shortly that Protective works, oh gosh, something in my eye, works with a third-party administrator that really helps with all things executive UL. So that being said, here are some of those nitty-gritty details. This is a group sale. Remember me saying that we had to spread this across multiple lives? We have to have a minimum of 25 lives to insure. So again, think companies, think larger companies. I'm going to run through an activity shortly, but we're really thinking maybe 200 employees or more. You may have those 25 higher income earners. The ages will go up through age 80. We are looking for more white or gray collar individuals. I am in Houston, Texas. There's a lot of oil and gas going on down here, a lot of large companies, and we have no problem working with those oil and gas companies, but we're not insuring the guys that are out on the rigs, right? We're insuring the guys that are at the home office. So, and when I say that they're higher income earners, they have to be making $100,000 or more. So higher income earners, right, white or gray collar. You'll notice if and when you see an illustration or a premium summary report, this is gender distinct. So we don't care whether they are smokers or non-smokers, but we do care about their date of birth and whether they're male or female. That's how we crunch the numbers on these. And we will talk about this 5-year rate schedule guarantee. I'll talk about that a little bit more in a moment here. But the minimum death benefit, guys, is $100,000. But most of the time, these are big sales. We will do up to $5 million on 2 underwriting questions. So I want to share with you those 2 underwriting questions and how we get to that death benefit amount that these clients will qualify for, because it all is based on an equation. And you see that equation in the bottom left-hand side of your screen there. So it's based on the number of lives that we're covering. Again, the more lives that Protective can spread this risk across, the safer we feel giving higher death benefits. So we talked about the minimum number of lives being 25, and you're going to see that there at the bottom. So at 25 lives, the multiple is $40,000. So easy math, 25 times $40,000 is $1 million, which means Protective would put $1 million death benefit on every single one of those 25 lives. Nathan, we don't have to do $1 million on everyone. However, that's what we could do. Some companies prefer to do a multiple of income. Some companies prefer to tier it where they may have the top 5 guys at $1 million and then the next 10 guys at $750,000. And then maybe that last tier of 10 guys, if you're looking at 25 lives total, $250,000. So there's a lot of flexibility there, but this equation is what you use to determine the maximum that Protective will be comfortable with. So you can see you get to 50 lives and that multiple jumps up to $50,000. So 50 times 50,000, easy math, 2.5 million. So we would do $2.5 million. Again, 2 underwriting questions on all of those 50 individuals. If you get to 100, you would max out at our $5 million that we would do in death benefit. So again, this is a permanent life plan. It's a current assumption, universal life, permanent life plan. It's not term, but you'll see here shortly that it's priced competitively with, in comparison with term coverage out there. So what are those 2 underwriting questions? It's very easy. Number 1, in the last 90 days, have you been working full-time at your job? Right? So has the client been working full-time at the company in the last 90 days? They can say yes to that. And then they can say, no, they have not missed 5 or more days of work in the last 90 days due to sickness, illness, hospitalization. Then they're a shoo-in. That's through age 70. We will insure above age 70. However, there's a little more underwriting. Not nearly as much underwriting as you might be used to a traditional life insurance. So this is definitely kind of a guaranteed issue type product or very simplified issue type product. It's all within the design there and the pricing. I told you we talk a little bit more about pricing. I wanted to give you a quick comparison in this market, kind of in that group sales market. And you can see Protective is incredibly competitively priced. So what you're looking at here, this is $1 million death benefit. This is a 50-year-old gentleman. And you can see that the annual premium for this guy is for Protective, $1,277. Very inexpensive. And you can see some of the competitors out there that have products of this nature. However, when this slide was designed, Banner was a player. Banner is now getting out of this space. Mass Mutual, I've heard some rumblings that they may not be in this space either, or wanting to be making some changes in that as well. So you can already see we're super competitively priced. And I'm telling you this because more than 50% of our sales over this last year, which at Protective, we've done about 10 million in sales our first year out of the gates. The vast majority of them are replacements of existing products or programs. And so again, getting your foot in the door at some of these companies, oftentimes they have something in place already. And it's just a matter of you getting in, doing a policy or program review, because the vast majority of the time you can put them in a better position, and then you're the hero. You're saving them tens of thousands of dollars, and you are the hero, putting them in a better position or allowing them to buy more death benefit. It really is a beautiful thing. So let me share one thing with you, just so you understand how Protective can be so competitively priced. So you see us at the top there with the cheapest option. This is a universal life product. So we're going to get into the weeds a little bit here. And if you have questions, I can get into them later. But a UL product has something called cost of insurance, right? And as we all get older, our cost of insurance goes up every single year when we get older. So this product, the way that we're pricing it and the way that we're funding it, if you will, is we're minimally funding it. We're just covering cost of insurance. So every year, the premiums on this product, they go up a little bit. However, you saw on a previous slide that the first 5 years, that premium schedule is guaranteed. And that is huge, because in the individuals, the other carriers that have products out there, no one offers a 5-year premium schedule guarantee. So that sets Protective apart a little bit. It's very much appreciated by the clients, the companies, those CFOs that are looking at the bottom line. And if you really take a step back and you look at it, it's almost designed like an ART, annual renewable term, with that premium going up a little bit each year. But CFOs at large companies, they absolutely appreciate that design, because if you think about it, they're really kind of only concerned about the now, the vast majority of the time. They don't really know or care about what their executive team is going to be 5-10 years down the road. They want to offer a perk or a benefit to the guys and gals that are with them now. And it's a really great opportunity for those clients, those companies, to have something extra, right? It's a great way for them to attract new talent and to retain the talent that they have, because this is just such a great added perk, additional death benefit for their family. God forbid something happened to them. And again, they can port it out and take it with them when they retire. All right, I told you there's not a lot of work on your end. Just like winning the lottery, you're buying the ticket and you're walking away potentially with a big payday. Same thing with Protective's executive UL. So not a lot of work on your part, because we use a third-party administrator. So you may have heard of Diane Eskin. They have been in this industry for over 40 years and in this sort of group space over 20 years. They do really everything from A to Z. So they will actually circle up on a call with the client to help solidify and sell the deal, if you will. They're very, very good at talking with the clients, talking about the perks of this product and the solutions that it provides. So they'll help sell the deal. They will run all the illustrations for you. You don't even do that. I don't even do that. They will do the enrollment. This is all online enrollment. And you'll see in the middle of your screen there, it says they're SOC 2 accredited. That is like the highest level data security out there, which CFOs, CEOs, owners of companies absolutely appreciate. If they're going to put their executives' personal information online, they want to make sure that it's protected. So Diane Eskin handles the enrollment. They handle any questions throughout the year that the clients might have. They'd help with the policy reviews. And here's the thing, this is literally the gift that keeps on giving. You think that initial payday is huge. It's the gift that keeps on giving, because not only do executives teams change, right? They may have some people retire and new folks coming in. Then you insure those new individuals, but also there's renewals on this product. So it is the gift that keeps on giving. Diane Eskin is fabulous at what they do, and they really are taking the brunt of the work. You are essentially making the connection on the front end. You can be involved. And then you're sitting back and getting paid. So sounds pretty good. I'm going to share with you a case study that we did work on, so you can see exactly sort of how this works, what the numbers might look like, and really how this can lead to additional potential sales. So in this scenario, this company, we were covering 93 lives, and they were keeping it pretty simple. So they were doing $1 million of coverage on everyone. And the advisor on the executive UL sale, once everything was wrapped up, made $55,000 in commission. Not too shabby, right? And then they worked with actually Diane Eskin, because we've done this a million times over. And Diane Eskin helped them craft an email correspondence in conjunction and permission with the COO of the company. But they crafted an email correspondence that that agent on this case then sent out to all of the 93 individuals that they covered with this executive UL program. The purpose of that was to introduce that agent to these individuals to see what other needs they might have. So that's the cool way that you can sort of spin an executive UL sale into additional sales. And that's what this guy did. He ended up with 24 additional sales for, personal coverage outside of work. 21 of them were term sales, which weren't too huge, but he had 3 IUL sales that were kind of retirement type plans. And this agent, he earned an additional $67,000 in additional compensation based on those other sales. So this really is, again, when I say the gift that keeps on giving, it absolutely is a great tool to help you jumpstart and have a stellar 2020. Over $120,000 really stemmed from this executive UL product. So that being said, if you have any questions, again, put them in the Q&A box or write them down. What I'd like to do next, as I promised, I'm going to run through a quick activity. What I'm going to do is I'm going to prompt you with some questions, because I want you to be thinking about the clients that you've already worked with, or just in general, the folks that you know within your network of crowd that you hang out with. It may be neighbors, it may be golf buddies, it may be really anyone that you have contact with. So that being said, grab a pen and paper. When I prompt you with a question, I want you to write down the clients' names, because we can always circle back with those with your sales and marketing reps or Nathan later to vet through the opportunities. So here's the first one.
So
who do you know?
I just wanted to say, Amanda, this is probably the most important part of the webinar, is Amanda helping you guys identify where to find these types of people. So I know in most webinars, I guess it's just going through the information. Okay, great. But then we all forget about it. This is something that take good notes. And I know, Amanda, you have kind of the worksheet we can send out to everyone afterwards, but this is where if you can just identify one of these types of people, then that could be a 25, 50%, 75%, maybe even 100% bump in what you are earning in 2022, which is why this activity is so important. So I just wanted to stress that as much as possible. Write down the questions that Amanda has and think about where you can find those people within your current network, and work with myself or your business development advisor or your affiliate marketing office to identify and find those people, and we will help you have those conversations. You just need to identify a way to be able to get into them. So I wanted, again, stress that as much as possible, because I know just for everyone here, one of these cases could change your whole trajectory for 2022.
Thank you, Nathan. You're absolutely right. And we will go over a quick and easy script after we go over this activity to sort of identify the opportunities. But yes, write as many folks that come to mind, write their names down or those companies down. So, okay. Who do you guys know that owns a business? And I know we're talking about larger companies, but just to start, who do you know that owns a business? I like to say, and I'll give you some examples of industries, if this may jog your memory as well, but law firms and accounting firms, they love this sort of thing. If you think about law firms, you may have competing law firms, and the vast majority of everyone in a law firm is high income earning, right? You have to have that 25 live minimum, but competing law firms cross town, they love to have the leg up on the other guy, right? So offering this additional benefit is huge. They probably have something like this in place already. And if they don't, they will absolutely gravitate to this. So any lawyers, write those down. But law firms, accounting firms, hospitals are great. If you have any connections in hospital administration, that's another one. But first and foremost, The first one really is business owners. Write down anyone that you know, anyone that you've worked with that's a business owner.
As everyone's doing that, we had one question come in, so I'll have you answer this one, Amanda. What is defined as executive? So can the insured also be employees as managers or other titles as eligible?
Yeah, so that is a great question. I'm so glad that you brought that up. So yes, it's called the executive UL, right? But don't read too far into that. We don't really care about their title. We really are mostly just concerned about their income threshold. So they absolutely can be any other executives, any other middle management. They could be in a sales role. If they're very successful in a sales role, they probably have no problem hitting that $100,000 income. And also keep in mind, they can be 1099 employees. If they are 1099 employees, we want to make sure that the vast majority of their 1099 income does come from the company that is going to be paying for this program or this policy for them. So that's a very good question. Don't worry about the fancy title. We really are just kind of concerned about income threshold, that $100,000 line. All right. So hopefully you did write down some of those business owners. The second one is, who's an executive that you know? Vice president, CEO, CFO, you may have a book of business where you've already worked with them, you've taken care of their other needs, but you know they're a higher income earner because you've worked with them. And you know that they're higher up at whatever large company that they're at. So you might not know the business owner, but you know that individual, and write those names down. Again, these might be guys that you've known for years. I mean, think back to your childhood. What do your childhood friends do these days, right? If they are successful individuals, let's write them down. It may be your golf buddies. What do your golf buddies do professionally? Again, if they're executives at large companies, write them down. Also, if you've done any extensive planning with businesses, if you've done any buy sell, if you've done any key person coverage, anything of that nature, you've maybe had in-depth conversations with these business owners, and they may have kind of shared with you what they're most concerned about, what, keeps them up at night. And if they're at all concerned about attracting new employees or retaining the employees that they currently have, write those individuals down, because that is one of the main things that attracts companies to having this sort of a benefit. We've all kind of been working our way through this pandemic, and companies now more than ever realize the importance of having quality employees, and they're looking for things like this to give back to their employees that they so appreciate. So anyone that's looking to attract or retain employees, if you've had conversations with folks in the past and they've brought that up, write those names down. Here's another one. Any large life insurance cases that you recently lost due to underwriting? And I say that sort of tongue in cheek, but there's been times where we've been able to take a decline in underwriting, traditional life insurance underwriting, and sort of back into one of these executive UL products. Because here's the thing, you remember the questions, right? It was, have you been working full-time at the company in the last 90 days? And have you in the last 90 days missed 5 or more days of work due to sickness, illness, whatever, hospitalization? So theoretically, you could have a guy that 6 months ago had quadruple bypass, chest cracked open, quadruple bypass, and traditional underwriting would say, sorry, Joe, we don't want you right now. However, with this product, this guy may have had quadruple bypass 6 months ago. Maybe he spent a month and a half kind of out of work and doing rehab, but he's been back at the desk. And over the last 90 days, if he hasn't missed 5 or more days of work, guess what? He's a shoo-in. So again, any large cases, write them down that you've recently lost due to underwriting. This could be a possibility to kind of lift those up from the grave, if you will. So that being said, okay, here's another thing. Name a recent buy sell plan that you worked on. And again, it goes back to the guys that you know, companies that you know, business owners that you know. But if you did a buy sell plan on a company, this is the best opportunity to go back to them and say, hey, we took care of you guys and the owners themselves, but let me share with you something new that I have access to that's different. And it very likely could provide an additional solution for your organization. So anyone that you did recent sort of business coverage on, write those guys down. And the last question I have for you is, think about any other sort of large estate planning cases that maybe you have worked. And I say that because if folks are doing estate planning, that means they are higher income earners and they have a significant net worth, right? So oftentimes they're business owners, or at the very least, they're often executives at large companies, right? How do they make their money? Why did they need your services already? So if that's the case, write those individuals down, because you have a leg up. You can get your foot back in the door and have a conversation with them to possibly provide another solution. All right, Nathan, that is the last of my questions. If I have your blessing, I will run through a quick and easy just script, if you will, and I can send this over as well with a follow-up email. Do I have your permission and go on that? All right. So here's the thing, guys. I prompted you with a bunch of questions, and you hopefully wrote down several folks that may be a fit for this product. But you might be intimidated about, how the heck am I going to bring this up? And don't be. It is so simple. And I'm going to use the example of, if you're on the golf course with your buddies and you know that your buddy Joe is a big wig at XYZ company, all you have to do is say, hey, Joe, let me ask you this. At XYZ company, do you guys have group term life insurance? And he's going to say, well, yeah, absolutely. And then you say, perfect. But let me see here. Do you think XYZ company would be interested in something better, larger death benefit for high income earners like yourself? Pretty much no underwriting, and it's portable, so you can take it with you when you retire. And I guarantee you, your buddy Joe is going to say, that sounds pretty good. And then the only thing that you need to do from there is say, perfect. Let me ask you this. Who at your company vets these sorts of opportunities? And most of the time, guys, it's a director of HR. It may be an owner of the company. It may be a CFO, but I guarantee you, your buddy can get you connected with the guys that do make those decisions. And that's really all it takes, because all you have to do is set up an opportunity to have a conversation. And at that point in time, if you've identified this opportunity and you can kind of get your foot in the door, we're going to triangulate a phone call between yourself, between Nathan and his crew, and Diane Eskin. We'll pull Diane Eskin on, and I can be on the call as well. But we can vet the opportunities to make sure it makes sense. But it really is as easy as that. So identify. You guys have group term insurance, don't you? Yeah, absolutely. Awesome. Do you think the company might want something a little bit better, especially for the high income earners like yourself? It's more death benefit, pretty much no underwriting, and you can take it with you when you retire. And everyone is going to say, well, that's a no-brainer. And it really is. So that being said, that's the easy script, which again, I will send out to you. So we talked about all the nitty-gritty details of the product, guys. We talked about those questions and kind of prompted you to rack your brain on opportunities. And then we went over that really easy script to sort of bring it up in conversation and really set up that call with that decision maker, essentially. So now, Nathan, I'm pretty sure we're ready for a little Q&A. If anyone has any additional questions about this product, about Protective Life in general, or anything else, free game.
Yeah, I was gonna say, this is open floor at the moment. Should be super simple from what Amanda went over. Again, the largest thing is identifying those types of clients. Again, you're not going to find these, well, depending on who you are, you may find a lot of these actually. But I know for most people, you're not exactly going to be finding, 10, 20, 30 of these opportunities. But again, just one of them can make a big deal, which is why this is just another arrow in your quiver with the clientele that you're already working with. And we went through an activity that can help you identify the type of people that this would be good for. So any other questions? Let's see, someone just put one. Are these policies more like a GUL, or can they be designed to have a large cash value?
So it's a very, very good question. I can answer that one, Nathan. So this is a current assumption universal life policy. So the only guarantee really in the product is that premium schedule for the first 5 years. If the company would like to have a level premium schedule for those first 5 years, we can show them what that looks like as well. So the other question that usually that's leads to is, well, when someone retires, what does that look like? Once the person that, is the insured, once they start to have to pay the premiums, what does that look like? So at that point in time, the owner of the policy, then the company's not paying for it anymore. The insured's going to start paying for the policy. They can design it however they want. So we'll run an in-force illustration and we'll say, hey, Joe, what do you want this to look like? Do you want this to be a 10 pay? And then do you want this product to, the policy to last to age 110, 120, 100, what makes sense for the situation? They could do a level pay, they could do a single pay. So there's some flexibility once they take it over from the company making the premium payments. That's kind of part one to the question. The other piece of the question was, well, can you design it to have more cash accumulation? I will tell you that this really was designed to be a death benefit product, especially because if you think about it, we're minimally funding this. So we're just really kind of covering cost of insurance, and which means there's not a lot of extra cash or anything in there to have a ton of cash accumulation over time. So it truly is more of a death benefit play versus, hey, I'm going to load this with cash so that I can maybe have income down the road. So more of a death benefit play for sure.
But I will say on that end, if you're already having this type of conversation, then that's a very easy one to add on an individual basis to be able to talk about individual planning or executive bonus plans from that perspective as well, because they do this, they can do other things also.
Yep.
So another question would be on organizations qualified, such as chambers of commerce or things small business owners can group together to obtain coverage. So I know you have an answer for that one too.
Yeah. So here's the thing. It does have to be an employer-employee relationship. So as long as there is compensation that's flowing from the company, to the employee, then that's really what we're looking for. So to give you an example, this past year, we put in place a program for a professional sports association. And it was the players association for this particular league, if you will. So that is technically an association, but there was compensation transferring from this players association to the individuals. And so we were able to cover all of those individuals. So you really have to have that employer-employee scenario. A couple things to keep in mind. I sometimes get asked well, what about a board member? Well, same thing. If that board member happens to also be receiving compensation, then yes, we can probably make it work. If it's someone that's just volunteering to be on a board, they would not qualify for this. You also ask, can the companies group together? Well, if there is sort of a mothership company that has subsidiary companies underneath, you can use the mothership to pay the bill. And that is a way that you can maybe pool smaller companies together to hit that minimum number of 25 lives. So each situation is a little bit different. And that's why my ask here really at the end of today's presentation is, if you think you've identified an opportunity, reach out to Nathan. Again, reach out to your sales and marketing rep that's helping you out on the regular, and they'll circle up with me. They have my contact information, and we can sort of vet through that opportunity even before you try and get your foot in the door to make sure it makes sense. So bring anything to my attention, and we'll vet through it to see if we can kind of make it work for this program.
Perfect. Let's see. Any other questions from anybody else? We do have a little bit of time. Well, if we'll hang out for a couple minutes. Amanda, is there any other good tidbits or things like that you have on that side of people to identify or things like that?
So there's a couple other little nuggets I can share. Just some more statistics. So I told you the average case size over this last year, right, is $262,000 in premium. And that's, of course, across all of those lives, right? Pretty significant. The average number of lives on the cases we've worked on is 116 lives. So we talk about 25 being the minimum, but honestly, there are some big fat daddy companies out there that we need to target. We have some 7-figure premium cases in the works. So, right, we kind of talk about this being the easiest way to sell a 6-figure case in 2022. And there's some 7-figure $1 million plus premiums that are in the works right now that we're sort of vetting through at the moment. So sky's the limit. Average age of the individual that we've worked on this year is 49 years old. And a couple of other little nuggets as well. Some people have asked, well, what about companies that are overseas? And so here's how that works. What we want at Protective is we want the company to be headquartered in the United States. Can be anywhere, really, even New York. I get asked about that sometimes. So in the United States is where the company needs to be headquartered. But if they happen to have a guy that's in London and a guy in Sydney, Australia, and a guy over in China, we can cover those guys as well. So that kind of helps to offer this benefit to a lot of the high income earners. And to hit that 25 lives is you can include folks that they may have working for that company, but they may be stationed internationally. So something else to kind of keep in mind.
Perfect. Just as someone asked a question about municipalities, what about them?
I would say it's definitely worth having a conversation because they most definitely have employees that are being compensated. So I would say let's circle up with that individual and get a better idea of the municipality that they're thinking of and the number of folks there that might be employed, and we can run that up food chain for sure.
Sounds good. Well, again, I'm excited about just the possibility of having this in your quiver. Again, take those questions down, bring in Amanda, bring in your business development advisor, your affiliate marketing office. Again, that's the beautiful thing about an opportunity like this, is that we're not asking you to be the expert. You're not doing all the heavy lifting. You just have to identify and establish a relationship with the person that people like Amanda and Protective and the TPA need to talk to, and we'll do most of the heavy lifting on that side. So that's what I like about this. You find the person, we'll do all the heavy lifting and the work, and we all get paid from it, and everyone's happy. Again, like I said, a case like this doesn't come along your plate all the time, but if you're not, as Amanda so appropriately said, the reason that people don't write cases like this is because they don't play. So if you don't buy a lottery ticket, if you're not even looking for people like this, then you're never going to find them. And now you know the type of people that you can identify for cases like this. And again, you write one of these next year, that could be a big deal to your bottom line. So any other questions? We've got a bunch of people still on. I know we have some time. This is almost weird where we could potentially end 15 minutes early, Amanda.
You're welcome.
What are we going to do with all this free time?
I don't know.
But any other questions that anybody has, just so that everyone knows this is recorded, I will send this out, the recording out to everyone afterwards, along with Amanda. I know you have some follow-up stuff. So anything that Amanda sends my way, you guys will all get in an email also. And again, let's identify those people and let's start working with them. And first, second week of January, now is the time till the end of the year to have those conversations, ask those questions that Amanda brought up, make it super simple, and we'll come in, swoop in, do the rest of the details and go from there. So anything else? We'll hang out for another minute. Other than that, we'll wrap this up.
Cool. The only thing I was going to share otherwise is, guys, this is, as you can probably imagine, it's a census-based sale, right? So you get the census from the company, and the only thing we really need to run illustrations is the date of birth of the individual and whether they're male or female and the death benefit that you want. we can then put together the illustration pack or the premium summary report, and we can get that back to you to have a conversation with the company or do that triangulation phone call. So it is very simple. The first step is getting your foot in the door. And then of course we need to have that census of the employee. We don't need employee names. We don't need their income levels or anything at the beginning, just to run illustration. So especially if they already have a program in place, which most large companies have something similar, they already have the census. And that gives you an opportunity to come back with our pricing, and they can do a head-to-head comparison with what they have. And I am telling you, it is going to be vastly less expensive, and you will be the hero. And it will be a no-brainer for the company to take a serious look at this option.
Perfect. Well, Amanda, thank you so much for your time. I will look out. Well, actually, wait, we got one.
Uh-oh, at the buzzer.
Yeah, at the buzzer, all employees or those that qualify, just the ones that qualify.
Yep, just the ones that they're wanting the coverage on. So again, those individuals that are higher income earners. This isn't a voluntary product, so they can't really opt in or opt out. The company is essentially saying, hey, we want to give this benefit to the higher income earners, and here are the names, and this is how we selected them. Maybe they're all have some sort of ownership in the company in some fashion. But you can't say, yeah, we want everyone but Joe in this program. You can't single anyone out. But for the census standpoint, we're not going to need a census of all the employees. It's really just the folks that they're wanting covered with the program.
Sounds good. Well, with that said, Amanda, I will look out for that information. Everyone that registered, you will get the email before the end of the day. And Amanda, if we don't talk for whatever reason, have a Merry Christmas. Have a Happy New Year's. I'm sure we'll have some conversations. If we don't beforehand, have them a first, second week of January, and we'll see if we can get some people identified.
Perfect. Sounds like a plan, guys. Have a good one.
You have a great day, Amanda. We'll talk to you later.
Bye-bye.
Bye-bye.